morning. Welcome to 55 minutes of current and relevant business conversations, which is a norm here in Business Morning on Channels Television. I'm Ini John Mekwa. We head right into it. Oil prices rose slightly on Thursday, finding some support after heavy losses in the previous two sessions, driven by fears of a U.S. recession and an increase in Russian oil exports, which dulled the impact of OPEC production cuts. Brent crude was trading at $78.01 a barrel. That's up 32 cents, while U.S. West Texas Intermediate crude added 21 cents to trade at $74.51 a barrel. Oil prices dropped almost 4% on Wednesday, extending sharp losses from the previous session, with recession fears overshadowing a bigger than expected fall in U.S. crude inventories. As of Wednesday's close, Brent was down 4.9% for the week, while WTI has lost 4.6%. OPEC's share of India's oil import fell at the fastest pace in 2020-2023 to its lowest in at least 22 years as its intake of cheaper Russian oil surged, while China is also ramping up buying of Russia's Urals oil. Oil loading from Russia's western ports in April will be the highest since 2019, above 2.4 million barrels a day, and that's in spite of Moscow's pledge to cut output. Still talking oil now, Malaysian palm oil futures lost ground on Thursday for a fifth straight session, hitting their lowest in over a month as Indonesia lowered its mandatory domestic sales threshold. The benchmark palm oil contract for July delivery on the Bursa Malaysia Derivatives Exchange slid 47 ringgits, that's about 1.32%, to 3,523 ringgit a ton by midday, its lowest since March the 24th. The vegetable oil is also on course for its lowest losing streak in a month. Policy changes from Indonesia have resulted in a choppy move in the market. A Kuala Lumpur-based trader had observed this, that the world's top producer will lower its mandatory domestic sales threshold for palm oil producers to 300,000 tons a month, starting from May, from 450,000, which is the current state. The government will tighten the ratio of palm oil exports to 4 times the volume producers have sold domestically from 6 times the volume, but ease the rule for some other cooking oil products. Grains now. Chicago wheat futures fell for a 7th consecutive session on Thursday, hitting a 21-month low, as forecasts of rains in the United States green belt and plentiful of global supplies weighed on prices. Corn and soybeans lost more ground. Better weather in the United States continues to be concerned over the lack of interest in U.S. wheat helped to pressure prices. The most active wheat contracts on the Chicago Board of Trade lost 0.1% to $6.41 for half a bushel after dropping earlier in the session to its lowest since July 2021 at $6.40 a bushel. Corn fell also 0.1% at $6 for a quarter of a bushel. Soybeans slid 0.1% to $14.14 for half a bushel. Ample global supplies are likely to cushion the impact from lower Ukrainian exports. Canadian farmers intend to plant 27 million acres of wheat, the most in 22 years. Soft wheat exports from the European Union in the 2022-2023 season that started in July had reached 25.02 million tons by April. That's more than 10% compared to the previous year. Well, back here in Nigeria, at least $22 billion worth of investment are being attracted to Delta State through its special economic zones. This was revealed during the presentation of an official license by the Nigeria Export Processing Zones Authority, NEPSA, to Governor Ifeanyi Okowa in Abuja. Governor Okowa says that the Delta State government is in a hurry to get special economic zone work for the state and for Nigeria. He says the state is enjoying relative peace, which will boost investment in the state and around it.
For those of you who know Delta, you know that we have several towns and cities developing all at a very fast pace. And we also have Beyond this, the fact that we have a lot of road networks, my chief of staff talked about the dualized Warri, Ughelli, Asaba road, which spans over 160 kilometers of road that is well dualized and leads us to several places. We also have the Warri port, and we believe that the cocoa port is something that will be of great advantage also to us. In Delta State, we have two functional airports, one in Asaba and the other one is in Warri. And these are clear advantages in the industry. We are ready for the partnership, not only with NEMSA, but with the rest of Nigerians, particularly the organized private sector and the global community. And we're there as a state to ensure that we're able to provide a competitive environment, a peaceful environment, a welcoming environment. And also we work with the rest of Nigerians to ensure that we're able to develop the human capital, which will also be needed for the growth of industries. As of today, Delta State runs 4 functional state universities, which I believe is a clear advantage, particularly as we also have a University of Science and Technology. I believe that we are ready to ensure that this special economic zone works for all. But we call on NEMSA and its management staff to continue to offer the best of advice and support that we need and the lead consultant so that we're able to make things work much faster, not only for Delta State, but for our nation, Nigeria.
The governor of Delta State, Dr. Ifeanyi Okowa, and well, congratulations to Delta State, but more congratulations when we see the economic zone active and impactful in the economy. Now, yesterday there was the news that the federal government has commenced the disconnection of some power firms from the national grid as a result of their non-adherence to electricity market rules. Power sector players include the electricity generation, transmission, and distribution companies. For all players to interact effectively, but of course, there are those rules. And, well, a lot of people have been trying to understand the implication of this. Will it mean blackout? I know I did see some newspapers talk about blackouts and all of that, but let's get to the bottom of it. Even understand the market rules we're talking about, and then how it will affect you with Mr. George Atumi. He's the chairman, West Power and Gas, joins us virtually from Lagos. Mr. Atumi, good morning. Thank you so much for your time this morning.
Good morning, Ini.
So help us to understand, who are those affected here? What are these market rules?
Now, just to give you a little bit of a background, you know the value chain consists of generation, transmission, and distribution. In this particular case, let's just face the transmission end of it. Under the transmission, the TCN, you have two major, you can take two sub-regulators, the market operator and the systems operator. Now, what the market rules are is that whenever you are licensed, any firm that does business in the electricity industry has to be licensed by NERC. Once you are licensed by NERC, you go and sign what they call the market rules. And it's a voluntary thing. You go, you sign. And those rules are administered by the market operator. And what that does is that it enables all the power that's generated to be accounted for. The power is generated, is accounted for because it's bulk metered by the market operator. And then it is then dispatched to everybody. And everybody here includes the GenCos, DISCos, NBET, even the private generating company, anybody who does business in NESI. So the market operator is complaining. And the way the market operator operates is that it requires that everybody in the system posts a bank guarantee to secure their obligation. And when the temporary electricity market was introduced in 2015, in the throes of privatization, every market participant was required to post a bond. Now, some didn't post, some posted. But what has now happened is that as market is now evolving into a contract-based market, the market operator is complaining that because it is not receiving all the monies it should be getting, and the way it gets money is that once he dispatches power, say to a disco, for example, the disco it's itself metered. They are expected to then generate income from consumers. That income is then remitted on a threshold agreed with NEC, depending on how the subsidy, the cost-reflective tariffs work. Now, what the market operator is complaining is that even that non-tariff reflective invoice that is sent is not being fully honored by these market participants. And it has warned several times that the only way it makes income is through this provision of services. And if services are not paid for, then it.
All right, looks like there's a bit of hitch there with the network from Mr. Itomi. We hope to get him back. Mr. Itomi, are you back?
I'm back. Can you hear me?
Yes, I can hear you.
Okay, sorry about that. So if you just look at how the distribution companies work, for example, if they send you an invoice for electricity consumed, you don't pay, they disconnect you. This is really what they are doing here. The market operator is saying, you are not honoring your obligations, we're going to disconnect. And since sometime in February last year, they sent out notices to various market participants. Come and post your BGs, renew them, and then keep up with the 100% remittances. Because, for example, now discos are expected to make 100% remittances of whatever invoices they get from the MO. Now, the problem now is that not all of them, not just discos, all the other market participants are able to fulfill this obligation. And MO is now beginning to wield a big stick. Because we don't want to go under. If we go under, everybody goes under. And I know you asked the question, does that mean there won't be electricity? Not necessarily. They will just disconnect those who are not performing. The electricity will be diverted to those who are performing. The whole idea is that you need market discipline and contract enforcement so that people are alive to what they should do and not simply take power and walk away. Don't forget, we're still battling with when power was entirely federal government controlled, and because all the agencies all are connected with federal government, all manner of things could go on. But now we have different market participants, and there are different contracts they've signed, and they want to enforce all those contracts. So this is really what's going on.
So I know you always preach the message of a service or costs reflective or service reflective cost, or is it the other way, has always been your message. So does this trickle down to perhaps the consumers, how much the consumers pay, and even the willingness of consumers to pay for what they consume?
Yes, it does. Yes, it does. Because as I've discussed several times, even the discos are metered. That's what many people don't understand. So that consumer who is refusing to pay or who is stealing electricity is not helping the market at all. And that's why discos at times come down very high, because whether or not they like it, if you do not collect sufficient revenue, you will be owing the market. And what is now happening is that many discos are actually borrowing from banks, and they are overborrowed to meet up with market obligations. Some servicing investor loans, and in some cases, by the time they do that, they don't have enough money to remit to the market. So the whole value chain is illiquid as a result. The MO is saying, for example, it is getting only about 15% of what it should be getting. I don't know how verifiable that figure is. But most of these things are metered, so I guess you can easily find out what the true position is. But the thing here is that the MO wants to get its money, period. Because the MO itself collects money on behalf of all the participants in the market, like even NERC. So it is from their NERC service, every one of them who does regulatory functions are serviced. So if they are slack and the government is not giving them money, then something can easily go wrong. So this is where we are. In other words, market discipline is important. And throughout last year, what we were doing was how we could bring about market discipline. And if you recall, the CBN got involved. We then had a waterfall in which all disco revenues are escrowed. And from that escrow, there's a waterfall arrangement where you pay off any loans you've taken, you pay off the MO, you pay everybody. And it is whatever is left in your account that you use for your own operations. So it is not in the interest of anybody to owe the market. So the discos are...
Unfortunately, once again. All right,
I'm
do we have Mr. Itomi back?
I think I'm back.
Okay, all right, yeah, you're back. Go ahead, Mr. Itomi. Oh, wow. Seems we lost him again. I mean, being a stakeholder in the industry, it would have been interesting. I wanted to close out the session by asking him if he could tell us, we've seen the Lagos State governor hold meetings with, I think, discos the other time because of the amendment to the Constitution that now allows states to generate and distribute power. And it would be nice to get, if we have Mr. Itomi back, just to close out on that. Mr. Itomi, can you hear me?
Yes, I'm back.
Okay,
yes.
we're almost out of time, but I mean, I would really like to get your thoughts on, the law that now allows states to get into generation and distribution of power. We've seen the Lagos State governor, for instance, have meetings with discos, and I don't know what's going on. What's going on around there? Do we see it coming to fruition anytime soon and changing the narrative of electricity supply in the country?
Absolutely, absolutely. But the trajectory will differ from state to state. In the case of Lagos State, they've been very proactive. Long before this formal amendment of the Constitution, the Lagos State government has always worked on the principle of collaboration with existing discos, and there are two of them, Ikeja Electric and the co-disco that serve them. And really, that's the way it should go. It should be a template for all other states, because if you want to go it alone, it's going to suck all your revenue. There's so many other competing interests for your attention. So you do not want to reinvent the wheel. Just work with the existing discos and see how you can complement them. And the way you can complement them is to look at the areas that are currently underserved or unserved and begin to provide off-grid solutions for those ones. The grid will still be there. As the grid strengthens, the electricity market will firm up. But to reach the underserved, those in the rural areas, those with small and medium-scale businesses, you begin to look at how you can create mini grids around alternative sources of electricity, like solar and so many other things. That's where Lagos State is going, and it's proactive. We like it, and I know it will succeed in Lagos, and it can be used as a template for other states. States just shouldn't rush to go and say they want to own the entire value chain. They will just recreate the behemoth that brought us into this quagmire in the first place.
All right, Mr. Itomi, thank you so much for your time. Mr. George Itomi is the chairman, West Power and Gas. Thank you so much for your time, and enjoy the rest of your day.
My pleasure.
All right, another kind of power, energy cost is what we'll be tracking. We'll take a breather, and then we'll be back here on Business Morning. welcome back. Just before we head to that energy tracking conversation, let's see what's happening in the commodity space. And one news that we saw yesterday was that foreign airlines will now be paid back. You know, that's repatriation of funds still in the news. They'll now be paid based on from certain windows. And of course, that's having impacts on the commodity space. We have Adesola Sumoni joining us now from Reading. He's a senior analyst, financial derivatives company. Hi, Adesola. Good to have you for a second time this week. Good morning.
Morning, Ini. Thank you for having me on the show.
Great. So a lot of things happening in the airline space, and the Naira lost 4.81%, and that's in the IATA window. I think this is mostly connected to what's going on with the FX shortage in the country.
Thank you for your question, Ini. Like you mentioned, we are seeing, first of all, we have a multiple exchange rate window, multiple exchange rate system, and at the IATA, although for the at the investor and exporters window, we saw some appreciation. At the black market, we saw some appreciation, but at the IATA window, we saw sharp depreciation. And the key reason is due to, like you mentioned, trapped funds for international airlines in Nigeria. According to IATA, around over 700 million US dollars is trapped in Nigeria as of January this year. This is up around 12% year on year. And for businesses whose costs are mostly denominated in dollars, this has some implications on their business. So, and as a result, what we are seeing now is they are shifting the exchange rate towards the parallel market a rate, which is around 735 naira to the dollar, to be able to kind of mitigate against this issue of trapped funds. It's also important to note that the price of air tickets in US dollars has not changed. What has changed is the availability of FX, and that is why we are seeing IATA, many international airline gravitate towards the black market rates in order to repatriate some of the funds back. And this has knock-on effects on, for instance, foreign direct investment. This is happening at a time at which we're looking to concession we're looking to concession the airline industry. We're also looking at, it also has knock-on effect on the downstream aviation sector, travel agents businesses, looking at freight forwarding businesses, etc. So all of that has knock-on effect.
Yeah, even companies that are manufacturing, foreign companies manufacturing, even domestic companies that have to import some of their raw materials. I mean, this is really hitting deep into their profit.
Indeed, Ine, like you said, it's an issue of access to FX, right? And if you are able to access FX at the official rate, which is around 462 naira to the dollar, what happens is you then move to the parallel market, right, to be able to access some of this fund at higher rate of around 735 naira to the dollar. And this has knock-on effect. This has effect on your costs, and this has knock-on effect on the price, your selling price. And this also has implications for inflation.
Exactly.
And how long in this high interest rate environment. So all of it they're all interconnected, and they have knock-on effects.
Yeah, so I mean, I know on Tuesday you were kind of optimistic that we'll see a reduction in our inflation, the next inflation, maybe because of diesel. We saw the price of diesel reduce. But I mean, with things like this, those may just, chop off some of those gains.
Exactly. It depends again on Tuesday. We talked about diesel. How the price of diesel has declined sharply, which could reduce transport and logistic costs and could feed into some moderation in headline inflation. But on the other hand, with this FX issue, this perennial FX issue will kind of reduce some of those gains. So we may see, it depends on which factor outweighs, which factor is stronger, which factors weigh more on the inflation basket, and that would affect the that would tell us the net effect on inflation, I think.
Yeah, and then we see Brent plunged more than 2%. But Russia is still doing a whole lot of work in between there, even though we know that this is on a weak consumer confidence. The fear of recession seems to be back.
So for the oil prices, we are seeing a lot of volatility actually. We've seen oil prices give up most of the gains it made after Saudi Arabia announced that OPEC Plus are going to cut production oil outputs by bigger than expected. So we've seen most of those gains. Being reversed. And like yesterday, we saw data from the Energy Information Administration showing that U.S. crude stockpiles declined by 5.1 million barrels, which was significantly larger than the analyst expectations of a decline of 1.5 million barrels. Typically, this suggests that demand is strong. But on the other hand, we are seeing lingering recession fears. Especially in the United States, we are seeing also consumer confidence decline to a 9-month low. We are seeing lingering recession fears. For example, next week when the Federal Reserve meets the Bank of England, the ECB meets, we are expecting further hikes in benchmark interest rate by around 25 basis points. And this is going to also drag on economic growth and also lead to some oil demand destruction. And that is also weighing on prices. You also mentioned something about Russia. On Tuesday, we said that what's going on with Russia? Russia had pledged as part of OPEC Plus to reduce their production, but rather we are seeing robust exports come out of Russia. As of April, we saw exports reaching 2.4 million barrels per day out of Russia, which is the highest we've seen since I think 2021 or so. And we're also seeing a lot of sale going towards countries like India and China, who are not part of who are not imposing the price cap on Russia's oil. So we are seeing all of that happen. We also see that the mix of India's import of oil, the share of OPEC is reducing, while the share coming in from Russia is also increasing quite remarkably. Same with China. Overall, I think what traders are looking for, looking for a floor for oil prices. I think the consensus in the market now is that the floor will be around $75 per barrel. But now we are nearing the floor. Currently, price of oil is trading at $79 per barrel. And there's expectations that when the OPEC production cuts hit the market in May, we may begin to see some support for oil prices.
Yeah, we'll see which of the factors outweighs the other at the end of the day. But let's look at what else is happening in the commodity space.
Okay, so one big factor happening in the commodity space is natural gas prices in Europe. We are seeing a decline quite sharply, and that is due to 4 key factors. Number 1 is the weather, number 2 is demand factors, 3 supply factors, and 4 is storage. On weather, over the winter, we saw a warmer than expected winter, which led to lower demand for natural gas for heating, and that had implication for storage. Because of there was low demand, the demand on the storage was also limited. As of now, as of April, we are seeing storage, natural gas storage in Europe at around 57%, which is around 57% higher than 5-year average, and is also significantly higher for this time of the year. On the supply side, we're also seeing big imports coming out of North America, particularly the United States and Canada. So all of these factors means that we have huge supply, both in inventory and fresh imports, but we also have weak demand due to warmer than expected weather. So all of these factors are driving natural gases lower. But it's important to know that it is still, even though it's declined, it's still higher than it was around this time last year.
All right. Thank you so much, Dr. Adesola Somoni, Senior Analyst, Financial Derivatives Company. Thank you for your time.
Thank you for having me.
Let's take a breather. I'll be back with that energy conversation. All right, welcome back to watching Business Morning here on Channels Television. Energy cost has been a major driver of inflation, not just in Nigeria, all over the world, especially in Europe, with the disconnect or planned total disconnect from Russia, since the region has been depending a whole lot on Russia, for source of power, for gas, for oil, fossil fuel, and all of that. Now, energy, the price of energy has been making the news a whole lot globally. And Stairs got really interested in this. We see that they've been tracking energy costs, and they found that filling, for instance, the tank of a Toyota Corolla has gone up about 80%. Compared to March 2019, from about 13,215 naira. And then when you go to Jigawa, for instance, they pay about 139% for energy more than Lagos residents for every kilogram of cooking gas. So let's know more about what Stairs has discovered with Noel Okwedi. She's the Energy Insights Lead with Stairs. Hi, Noel. Good to see you.
Hello, good morning, good to see you too.
Yeah, even though the conversation is not a very good one, when we hear we have to pay more for energy costs and we're looking for how to taper inflation, tell us some of your findings at Stairs.
Yes, thank you. So, like you said, like you mentioned, energy prices are going up. So since last year in February, when Russia invaded Ukraine, you'll see that prices of diesel increased by over 160% from February to date. For kerosene as well, prices increased by almost 160%. For petrol, which is regulated by the government, we haven't seen that much of a spike. But compared to last year, prices have increased by almost 50%, about 46%, and the same for cooking gas. And these are the trends that we've been seeing with prices. So even month on month, we're seeing some states paying up to 8,600 naira for kerosene. For diesel, prices are almost 900 naira. For states like Bauchi, they're paying up to over 900 naira, 910 naira per liter for diesel. And we're just seeing all these spikes over the past year that have, like the spikes over the past year have even been higher than in the past 5 years from what we've been tracking. And this is just as a result of issues like the Russia-Ukraine war, the depreciation of the naira against the dollar, and also supply chain issues globally.
So, but we did see a story earlier this week saying that the price of diesel has reduced. From the beginning of the year, it was about 800, now it's about 640. So this should at least bring a little bit of calm to that energy space.
Yes, but the thing is, we can't. So we expect that prices will keep rising, and that's because prices of oil. So earlier you mentioned that oil prices had reduced a bit, but going into H2, we're expecting to see higher oil prices as China rebounds demand, and also from the supply side, we're seeing OPEC cuts and Russia, Ukraine is still going on. So all these issues mean that oil prices will continue to rise by H2 this year, even though they're kind of tapering down because of recession fears. And obviously these commodities, the price of oil affects the prices of diesel, petrol, and kerosene. So that's why we're expecting higher prices going forward.
Obviously fits into transport and food and all of that. And then looking at Nigeria's scenario where we're getting to a point where subsidy regime is supposed to end. I mean, it kind of looks scary because even with subsidy, we see the increase in energy costs, and now subsidy going off, then that's another fare.
Yes, exactly. So when the subsidy is removed, the government is saying that the subsidy will be removed by June, by the second half of the year. We're expecting to see prices going up to 500 naira or even more per liter of petrol. For now, the official pump price is around 200 or 195 naira. And so this has huge implications for Nigerians, of course, with inflation. Right now, inflation is at 22% for March. So when the subsidy is removed, we're going to see higher prices for transportation. And this isn't just transportation of people, but also for food, because most of our food comes from the north and they're transported to around the country using vehicles that are powered by petrol or diesel. And so the subsidy removal means that Nigerians have to brace up for higher prices when the subsidy is removed by June.
And there's no hedge anywhere. Doesn't look like there's anywhere to hide.
No, so I guess that would depend on how the government removes the subsidy. So if it's an abrupt removal, then there will be no place to hide. But if it's a gradual removal, then there might be some support, or even if, for example, if the government provides some like benefits like cash transfers, like I think they've said that they're doing, they've gotten a loan from the World Bank to give people cash transfers, the poorest in society, and things like that will help to cushion the impact. But I think ultimately Nigerians are still going to feel it.
So you don't think that the $800 million that the federal government borrowed and they're planned to, distribute to low-income homes and all of that, you don't think that will have a lot of impact?
Well, when you think about that $800 million for, considering that 133 million Nigerians are multidimensionally poor, according to data from the NBS, $800 million isn't going to scratch the surface of reaching the most vulnerable in society or in Nigeria. And for that reason, we're just saying that the government is going to need to generate, to raise a lot more money to be able to cushion the impact for a lot more people. I think the 800 million is just for 50 million Nigerians, not for, it's not going to get around to everybody that needs it. And that's the major problem with the $800 million loan that we're seeing.
Yeah, and that's why I think a lot of people are saying, instead of giving people money, why don't you have a system that is more sustainable? Because, I mean, if you give them money today, they spend it, they come for more. Where are we going to get it? And we're still already highly indebted as a country, making everybody a debtor, even Nigerian a debtor.
Exactly. I think the solution here is more long-term, looking at the savings from the subsidy, how the government can provide better employment opportunities, better infrastructure, better healthcare, and so that just to improve the lives of Nigerians. I think that's what will really have an impact to really make a difference for people. Yeah.
All right. Thank you so much, Noel Okwedi, Energy Insights Lead with STARS.
Thank you.
All right, let's see if the market has more energy today, since the energy cost is not looking very friendly at all. Let's have Will tell us if the market,
Ini, you don't have to ask if the market has enough energy.
Looks like the market has a lot of energy.
That's oxygen to last you the whole week and take you through next week.
Oh my, there she goes again.
So that's 0.95%. That's nearly
almost
1%.
That's really impressive.
That's very impressive yesterday.
That time is Transcore again.
Well, Transcore, Airtel did this thing yesterday.
Yeah.
Airtel, MTN, those are the most capitalized, in the market. And Transcore, you trust the volume and the value that
still in the drive.
Yeah. They're going on a roll there. Nothing is stopping them.
Investor sentiment will stop them. Profit taking will stop them.
Profit taking? Yes. Well, maybe not so soon. So we saw investors sustaining bullish sentiment in the market yesterday, 0.95%, up nearly 1% in yesterday's trading session. Buy interest in Airtel Africa, MTN Nigeria drove the index back to the 52,000 level, and the market cap is at 28 trillion naira mark, and the nearly 1% gain. Definitely we'll be expecting a moderation in the month to date and the year to date returns, which month to date is still negative 3.9%, and year to date is back to 1.7%. Now, total volume traded yesterday increased phenomenally by 209% to 6.48 billion naira, valued at 19.47 billion naira. Now, Transcore drove the value and the volume we saw in yesterday's trading session. Now, deals was at 5,109. Looking at the sectors, we did see banking and oil and gas in the red yesterday. Access Bank and Fidelity contributed to that downtrend there. Consumer goods, 0.61%, industrial up, insurance up, and market breadth yesterday was very wide. We saw 40 gainers compared to 7 losers. The market breadth, that's very, very positive sentiment. But we're going to be talking to Ambrose Omordion, Chief Research Officer, Invest Data Consulting, to give us more insights and more background as to if this bullish trend will be sustained. Good morning, Ambrose. It's good to have you on the program.
Thanks for having me.
Ambrose, you are a TA person, that's a technical analysis person. Market has remained bullish for 2 days now. What direction do you see the market heading right now?
I would say that the energy in the market is very, very high as we speak now. Also considering that the volumes speak a lot of, important direction for the market. When you see volume in the market, it tells you that there is kind of momentum that is behind the market. And that is a good news for Nigeria market that the high cap stocks also are not looking up. These are to support the volume that's coming from Access Bank, coming from transport, as you mentioned earlier in your intro. Tells you that investors are in for gain. And there are factors behind this movement in the market. I'll tell you that one of the major factors is that the tension between the interest and the yield market. We saw what happened yesterday that at the primary market option for Treasury bill, we saw a decline from 14.7 to 10.7. This is also a driver for the market. And at the same time, this week we're also expecting that the bond maturity for the month of April will also release about 535 billion to the market, coupled with payments coming from what for this Nigeria company paying dividend to their shareholder. These funds that come from shareholders are going back to market and in form of investment in that company that they pay the dividend or a lower stock that look attractive. These are the factors because anywhere in the world, liquidity is key, corporate performance is also key. Now that we're seeing that the Q1 number that hit the market so far beat market expectation, despite the contraction we saw in the month of February and of March, that this sector is what investors are looking at. Now that we're seeing positive earnings, I know at the beginning we were saying that we were expecting to see a mixed performance in terms of Q1. Yes, that will happen, but there are some sectors that they have shown strength where they are going in terms of performance. And don't forget that 3 months account is just management account. That investors or traders in the market should not be carried away with these numbers that are coming because these numbers are just to tell you how they have performed for the past 3 months of the year. And you, as an investor, look at what is behind these numbers. Some companies have not reduced their tax payment to boost their bottom line, which is the profit after tax. Some are factoring in a higher tax payment for the quarter to reduce that. Then, as an investor or trader, look at this number first because anytime, any day, for you to be a successful investor, you must compare with what your technical and your fundamental. Now that we TA believe on sentiment, and the sentiment is what driving the market, and that comes with volume. And the volume is looking better and better and good for us as technicians that market is going somewhere. But one thing is very, very key that as a trader or investor, don't be carried away with an up market. Up market will come, you know how to take your profit. Because many people invest in stock, but they don't know how to take profit. Now that we're seeing the boom, we saw the part of transport assets take the market to this level, learn to take profit. Don't be carried away with that up market. This is just first quarter number, and there's no dividend coming with it. Just to guide you how to invest for the beginning of the financial year that we're in, so that you know exactly where to put your tent ahead of what more subsequent quarterly results.
Okay, thank you so much. So we shouldn't be carried away. We should know when to enter and exit the market. Uptrend will not stay there forever. And you did predict earlier in the year that we will have a mixed performance for the consumer goods, and we'll probably begin to see that. Thank you so much, Ambrose Omodion, Chief Research Officer, Invest Data Consulting, for sharing your thoughts on the program.
Yeah, thanks for having me. Yep.
So yesterday we saw Transcorp leading in terms of top trade, 6.13 billion units traded. That's a huge chunk of that market. And Transcorp, as I said earlier, is still on a roll, not letting down anytime soon, Ini. So we're just going to probably wait to see more Transcorp action today.
Yeah, I will be waiting to see more of that. Thank you so much, Will. See you at 1:30 for Business Incorporated. So let's go to London now, where Juliana is standing by, even though she doesn't have a lot of good news because teachers are on strike. I'm surprised Juliana made it to the studio. I thought you'd be at home with the girls, Juliana.
I know, I'm very lucky. I've got to thank a very friendly, generous parent who's taken the girls this morning for me. But you're absolutely right. Yet again, Inni, tens of thousands of members, teaching members of the National Education Union, have downed tools again for, you guessed it, the same issues that we've been discussing extensively over the past couple of months: pay, jobs and conditions. This is the first in 4 dates that they're going to be striking. So today, then we've got Tuesday, May the 2nd, and then I believe there are going to be 2 further dates in the summer term. And it's not great. The timing is awful, particularly if you are studying for your GCSEs or your A-levels. Already these students, believe it or not, are still trying to catch up from nearly 2 years of lockdown. Then they've had a series of days where they haven't been able to practice and study for their exams. So it's not good. We have heard from Gillian Keegan, who's the Education Secretary. She, of course, is livid this morning because she believes that the pay offer that the government have given teachers is enough. So what that is a £1,000 one-off payment for all teachers and then a 4.3% pay rise at the beginning of the new term. Teachers just say that's absolutely ridiculous. It's not enough. They need much more. They're asking for above inflation pay rise. So now we just have to wait for the independent pay review body who are looking at what's been put on the table. But yes, I did manage a lucky escape today, Innie.
Well, good for you and good for us also. But I don't know if the gamblers will be that lucky. The new rules coming for gambling.
Yeah, this is pretty serious, actually, especially for minority communities. So lots of Nigerians living in the UK are probably one of the people who are suffering with gambling problems. And there have been an overall of gambling laws in this country for several years. We know that so many slot machines, so those machines that look really glossy but basically take your money, steal your life, and yes, it does lead to suicide. That's how acute the problem can be in this country. So we have seen an overhaul from these bricks and mortar gambling sites, but now what the government are trying to do, Lucy Fraser in particular, the Culture Secretary, she is releasing this white paper later today to begin consultation with bereaved families, gambling addicts, charities, and of course gambling online apps to try and see how they can prevent the scourge from continuing. I think the main thing the government are trying to target are those who lose up to £1,000 a day. £1,000 a day people are losing on online gaming apps. It's just way too easy for them to just click online. You know, they're spending £10, £10. It adds up to £1,000 a day. This has led to significant issues. So we are going to wait to see what this paper says, because of course gambling is still a business. People make a lot of money from this, and some people, if you are able to control yourself, are able to do it at a one-off event and they can make lots of money or lose money and it's fine. But I think the government now are really trying to target those who are prolific gamblers, and again this does affect ethnic communities and poorer communities more than it does any other. So we're definitely going to keep an eye out on that. And when there is an update, we'll give it to the viewers.
Yeah, thank you so much, Juliana. And we do know that some people are actually addicted to it. So, I mean, they might need some more help than the government's rules and all of that. But thank you so much. I'll talk to you at 1:30, Juliana.
Thank you. Talk then.
Let's go to the crypto space now, see if Laddie is doing a lot of gambling, you know, with this crypto and his coins. We have new rules, Laddie.
Yeah.
We're going to make it very tight for you to gamble with your Bitcoin.
Yeah, investment gambling is what they call it these days. If we look at the market there, we see it's back in greed from neutral position for the sentiment in the crypto space. 59 points. We're seeing some support there, showing that the investors are getting quite bullish in this market, regardless of the sell-offs we saw from that 30,000 level. Look at the top cryptocurrencies we tracked there. We see Bitcoin, a big jump there, 2.58%. All eyes were looking at that 25,000 level next, but it seems Bitcoin had other plans with that banking issue we see in the U.S. and with most global bankers there. That news yesterday from First Republic Bank in the U.S. did prop up Bitcoin today. We see Ethereum also not left out of the party. It's up 2.32%, $1,913. Almost back to that $2,000 level. Psychological point most investors are watching out for. BNB, $333, lost that 350, 340 range, down 1.44%. And we see XRP below that 50-cent level. Cardano up 3.38%, one of the top gainers we're seeing today on the top alts by market cap. Let's bring in Mary Maswan now, financial market analyst. Hello, Mary. Great to have you.
Hi, Ladi. Nice to be here.
Yeah, so how do you see that jump yesterday with Bitcoin? Most analysts thought we're going down to about 25, but we saw that big jump, but we're still below 30 this morning.
Yeah, it was quite interesting to see. I know that there were speculations of it going a lot lower, but it's good that there was a jump. So if those who missed the opportunity to buy, maybe you have to watch out closely. But those who did buy when it was around the 27 range, like lucky you. But we are still in the bear market. It's still, I think it's something you need to still be careful about. But for those who are regular stackers of Bitcoin, I think it's really not a problem.
Always a chance for the stackers to stack up more with those pullbacks. But let's look at play to earn. Now, I know that's still quite hot in this market, even though we've not been hearing much about it. But we're seeing that some Africans are getting rewarded playing some of these games with Satoshis. Tell us about this.
Yeah, so actually, recently there was a partnership between Zebedee and Bitnob. So Zebedee is a Bitcoin gaming infrastructure company, and they partnered with Bitnob to make it possible for people in Africa to redeem their earnings in their local currency. And this is really huge for us in Africa because now we have a way to redeem our earnings from Bitcoin games that we play. But to take it another step forward, what they did was this partnership, what it does for us now is that even gamers and game developers can benefit from this. So I stream Bitcoin games myself on Twitch, and it just I have the opportunity to cash out my Bitcoin tips that was sent to me using the Zebedee Streamer tool in my local currency, which is now another opportunity for us in Africa to sort of make some sort of earning through playing games on Twitch. Unlike the other Twitch gamers where they have to play maybe about 3 to 5 years before they make any source of income, through this partnership, Africans can now start making some sort of income through gaming. Then as for the game developers, the Zebedee API makes it possible for the gaming studios to integrate Bitcoin rewards in their games, which will increase engagement and more downloads, which is a win-win literally. So the players get to win some Bitcoin from the games, and the game studio gets to have more money in terms of ad views because more people are downloading and playing their games. I think this is a really great opportunity for us in Africa.
Looking at that, play to earn economy, is it really sustainable? Can most of these gamers really get paid for playing these games?
Well, we have seen a lot of interesting situations where this was possible. In fact, there was a time when Zebedee published a tweet of one of the gamers who used their Zebedee streamer tool, and that gamer was able to earn enough to pay his rent, buy food. So, and this was for someone who was in Brazil. And I know that they also are able to earn Bitcoin through playing CSGO. So these are like possibilities that could happen for gamers, but it really does depend on how you market yourself and put yourself out there and how consistent you are. So, I mean, for us in Africa, I think it's great because, if you compare, like if you are able to win $10, like it could go a long way in Africa if you convert it to the local currency versus what $10 can do in the West. So I think there's high potential there.
Well, I love to play games, but I don't know if I'm good enough to make money, in this gamer economy, but I guess I'll give it a shot. Thank you so much, Mary Massa.
You're welcome. You're welcome. Thank you so much, too.
All right, so there we have it. Market's not looking too bad, still quite bullish. Look at the top gainers. We see Eagle, the topping that count at 23.01%. Render token also up 14%. So we're seeing some double-digit gains this morning. So market's still looking quite bullish in here. And if you're looking to play to earn, because I know you like to play some of those games.
I am, Ladi. I wasn't interested before, but now that Mary says we can get our money in Naira, I'm interested.
Yeah. So you're going to change profession.
All right. Thank you so much. So that's it on the program. Thank you so much for being a part of it. We do have a final one tomorrow. You don't want to miss it. Let's do it again. But Will Ibong will give you updates from the world of business at 1:30 during Business Incorporated. So do join us then and have a great day. I'm John McCarthy.